Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with his good friend, Stephen Dow from Velocity Mortgage. How you doing, sir?
I'm fantastic. And yourself?
I'm doing well. Do me a favor. Let's get that marketing thing out of the way first.
Yes, sir. Again, although I happily work for Velocity Mortgage Capital, all the topics and ideas discussed on this channel are that of my own. And yeah, let's get this thing done.
There you go. So one of the things I thought we should talk about after talking about my great experience and my ability to get to 3.99 is I think we need an episode talking about the sweet spot of the market, the kind of borrower, the loan amounts, all of that really guarantees someone the best opportunity to mirror what I got, right? The 3.99. So as far as I know, it's going to probably be three factors that drive this. First and foremost, it's going to be a purchase versus a refi, right? It's going to be a purchase. Is that correct?
Correct. Typically because the refinance is a little bit higher in rate, but correct.
Yeah, it's more risky, if you will, a purchase versus a refi versus a purchase.
Correct.
The other thing, obviously, having gone through the process, is you're going to look at somebody's FICO score, and their FICO score will lead to a rate, right? If you have a lower FICO score, you're going to get a higher rate. So where does kind of the best rates start for you?
The sweet spot as it pertains to credit score would be 750 and above as far as your mid FICO score out of the three.
There you go. And then the last thing, the one that gives you the most flexibility to look at the entire cost structure of the loan is, I think it's $750,000 is where it starts to get extremely interesting. Correct. And you could play with the levers, if you will.
Yes, sir. Because again, as a company, we're trying to attract the larger loan amounts because it's the same amount of work per file. Yeah. So we would rather be a little bit more aggressive in attracting those larger loans. So whether it be pricing, cost, things of that nature, we're a lot more flexible on the larger loan amounts. Because again, if we're using the same amount of overhead workforce to process each file separately, we would rather have the bigger one because in the end, that's where we make most of the juice on the secondary market, is on the larger loan amounts. It's based upon loan amount.
Yeah,
so
of course.
That's where we want to attract that. So the sweet spot really is 750 and above loan amount, 750,000 that is, 750 mid FICO score and above, but all you need is minimum 750. And then obviously a purchase would give you the lowest possible chance of a rate, and of course lower leverage. The lower the LTV, the lower the interest rate.
I forgot that.
Lowest interest you get
50%
LTV and below. But again, right. Yeah. But that would mean then that you'd be buying a $1.5 million property, putting down 50%. You know what I'm saying, Mike? So you can't always get that, but still anywhere from 500, 750, somewhere around there. I'll still, be pretty aggressive. I'm just trying to build relationships with a lot of your people. So a lot of them understand once I get a chance to talk to them where they see the benefit and the added benefit with me being involved. So
I've been very pleased not only with my my service, both with you, and obviously I was pushing on the other team, as I said in video one, but everybody in the one rental at a time family has come back saying, you can't guarantee yes answers, but you've been a pleasure to work with. I still can't believe you're doing 30-year money on my office building, because that is something I didn't think existed until we talked months ago. That's crazy. Because I'm purposely trying to get 30-year money on commercial stuff now, because I don't want that interest rate risk in 5 or 7 years, which a lot of commercial loan products have. Plus it's 30 years, not 25 amortization, which helps. So it's pretty good stuff. So again, you'll do 30-year money. I still can't believe this. 30-year money on apartments.
Yes, sir.
Yeah. What is the loan? Is there an upper limit?
Yes. Max loan limit on commercial or multifamily is 5 million. So we play primarily in the small balance commercial loan space. So max is 5 million.
Yeah, 5 million is the loan, not the purchase.
Correct.
Okay. Very cool.
So hey, if you're purchasing a $10 million property, commercial or multifamily, and you want to put down 50%, come to me. It'll be a really great deal. I mean, if you're talking about that kind of loan limit, you'll see. Yeah. I've got a deal right now that's in process for 3 million, and I think we're at 499 on that one.
Yeah.
And we went really aggressive on the pricing, so the client was very happy to say the least. So
it's not again. Some of the viewers may not realize that that 30-year fixed rate payment on an apartment market, especially with the inflation that I see in front of me,
right,
it could prove to be a lifesaver. Because again, Jonathan Twomley, who's an apartment syndicator, and I did some math like 6 months ago, and we probably should do it again, where if interest rates go up and cap rates go up, it doesn't take a lot for an apartment to fall in value, which will hurt your refi. And then you got to come up with all this capital. I'm like, I want to remove all of that risk. Hence, I'm paying a little bit more interest now to get 30-year money. So it's pretty fun. So if somebody wants to have a conversation about loan products and limits and all of that, what should they do, Stephen?
Again, just email me, sdow@velocitymortgage.com is right below us. And don't forget to put ORAAT in the subject line, just so it passes the firewall. But other than that, I've been working all weekend. So if anybody needs me, just email me. Cool. I do apologize for slight delays on certain days, but 100%, if you put that in the subject line, sometimes that's the only problem is people get caught in the quarantine and then I get to them a little bit later than usual. But otherwise, you put that in the subject line, I can usually pull you up because it just all gets, filtered into one folder. And so I just go to that folder and just start replying back to everybody. Yep.
Very cool. ORAD, of course, stands for one.
Thanks again, Mike.
Yep. ORAD stands for one rental at a time. If you are self-employed, don't want it reported on your credit report. DTI is not good. 30-year money, pretty low rate. So thanks, Stephen, for all you do.
All day.